Today, I will be talking about the changes to innovation and creative sector tax reliefs that were announced at yesterday's budget, as well as some that were previously announced that will come into force from the 1st of April. Firstly, I just wanted to talk a little bit about tax relief for businesses in the creative sector. The previously announced reforms to tax relief for film, television and video game companies were confirmed in yesterday's budget, and in a welcome boost, the rates were increased from those that were previously announced. All existing tax reliefs for film and television companies, as well as video game production companies, will be replaced by an expenditure credit. So the rate of credit for high-end TV and films will be set at 34%, and for animation and children's television programs, it will be 39%. Moving now to research and development tax relief. This is a relief that has undergone numerous changes since it was first introduced in the year 2000. We currently have a two-tier system where large companies can claim under the RDEC scheme and smaller companies claim under the SME scheme. One of the major benefits of the smaller company scheme is that a loss-making business can surrender part of that loss for a cash repayment from HMRC. This is often vital for early-stage startup companies to aid cash flow and help further develop their initial ideas. Over recent years, there's been a significant increase in the number of businesses making R&D claims. Over the past 7 years alone, the number of R&D claims made has more than doubled to almost 90,000 per year. As you can see from this graph, the vast majority of these claims are under the smaller SME scheme, and that's represented by the green bars. Within these SME claims, almost 39,000 companies selected an option for a cash repayment from HMRC. This increase in claims has put additional pressure on HMRC. They openly admit that there are significant errors being made in claims, especially within the SME scheme. The generosity of this relief also makes it open to fraud. By way of an example, we have seen a massive increase in clients being cold called by boutique firms offering almost a guaranteed level of repayment without any research into the company and knowing anything about what they do. In order to help tackle the abuse of R&D tax relief, the government are making changes in 3 areas. They're reducing the rate of relief under the SME scheme, they're restricting the expenditure which qualifies for relief, and they are increasing resources for HMRC so they can carry out more reviews into the claims that are being made. From the 1st of April, the rate of enhancement under the SME scheme is dropping from 230% to 186%. In addition to this, the level of repayable credit in most cases is dropping from 14.5% to 10%. Taken together, these measures drastically reduce the generosity of the SME scheme. At the same time as this reduction, the large company RDEC scheme is seeing its rates increase from 13% to 20%. That is also from the 1st of April. Now, the reasoning behind this increase to the RDEC scheme is that studies have shown the RDEC support actually generates a better return on investment in terms of both growth and job creation when compared to the SME scheme. The UK RDEC scheme is also less competitive than international equivalents, and therefore this increase hopes to address the current imbalance and attract large R&D companies to undertake their activities within the UK. Ultimately, the 2 R&D schemes are likely to be merged into one single scheme, which will come into effect from April 2024, and is likely to be based on the RDEC rules. More details regarding this will be announced in the summer. Looking now more closely at the reduction to the SME scheme rates, if we've got a company that has got £100,000 of qualifying expenditure, if that company is profitable, the effective rate tax is currently around 25%. Now, that's going to reduce, the effective rate of relief is 25%. That's going to reduce between 16 and 21.5%, depending on the level of profits for the company and the rate at which they pay corporation tax. For a loss-making company that gets the repayable credit, that reduces from around a third down to 18.6%, and that's almost halving the relief that's previously available. And have a huge impact for those start-up, early-stage businesses who rely on R&D tax credits to help get their ideas off the ground. Now, this was previously announced in the autumn statement, and as you can expect, caused a lot of uproar within those early start-up companies. Now, the good news is the government have listened and set out yesterday that for R&D intensive businesses, the rate of repayable credit will remain at the original 14.5%. Now, to qualify as an R&D intensive business, a company must devote at least 40% of their expenditure into R&D qualifying activities. If they do this, they will benefit from the 14.5% credit. And while there's still a reduction in the overall generosity of the SME scheme, these R&D intensive companies will receive repayment equivalent to 27% of their qualifying spend. Now, on a practical level, this appears to be somewhat last-minute change. The HMRC systems will not be able to cope with this from 1st of April, and they won't be able to, companies will not be able to make a claim for the higher rate of relief. It's likely to be the autumn before these companies will benefit from the full relief. Moving now to the reform of qualifying expenditure. Again, from the 1st of April, 2 new categories are being added. Data licenses and cloud computing costs will benefit from the enhanced relief moving forward. This will be a particular benefit to those companies whose R&D activities are underpinned by mathematics and therefore rely heavily on data sets. One further change that will have a huge impact is the restriction and relief for overseas expenditure. Currently, as long as costs are incurred by a company within the charge to UK corporation tax, relief is available regardless of where the actual R&D activities are undertaken. This is of great benefit to many companies, especially where, for example, they subcontract out software development to the USA or India. However, in the future, any subcontracted R&D activities will need to be performed within the UK in order to benefit from the enhanced relief. Similarly, any externally provided workers will need to be within UK PAYE in order to qualify. There are some exceptions for the overseas activities, but this is usually restricted to where there's an environmental or geographical need for the activities to take place outside the UK, rather than due to the lack of available workers or for cost-saving reasons. This change was originally due to take effect from 1st of April this year. However, it's been pushed back for 12 months and will now take effect from 1st of April 2024. For some companies, as I say, this is going to have a substantial impact on the R&D relief that's available to them, and they should take this additional 12 months to assess the impact and make plans accordingly. Turning to the third area of change, HMRC have been provided with additional resources so that R&D claims can be scrutinised in more detail. To help HMRC identify the claims that require greater review, any claim submitted after the 1st of August will need to provide additional information to support the claim for tax relief. This will include a breakdown of the qualifying costs, detailed descriptions of the activities undertaken, as well as the contact details of any tax agent used to complete the claim. An officer of the company will also need to provide a sign-off as a person who has overall responsibility for the claim. Now, this is all information that we have included at Scrutton in our R&D reports for some time, but for some businesses, they haven't included anything with their R&D claims. So they are going to have a massive admin burden when they come to file their claims in the future. As well as this, HMRC have had around 100 extra officers allocated to specifically target R&D tax relief. And this has already led to a substantial increase in the number of tax inquiries being opened to examine claims. While the tackling of R&D relief abuse is welcome, this can lead to inquiries being opened into perfectly valid claims, and these inquiries are time-consuming, costly, and stressful. The key with all claims for R&D tax relief is for business to get specialist advice from competent, experienced professionals. The best advice is not always the claim that makes the highest saving. It's the advice that can produce a robust claim, which, while maximising relief, can also stand up to examination from HMRC and mean you can sleep easy at night without the risk of an inquiry. One final point on R&D claims is cash flow. Despite the increase in resources within HMRC, we are seeing considerable delays in the issuing of tax credits to companies. While delays are currently commonplace throughout HMRC, it's especially relevant for corporation tax and in particular R&D claims. We are seeing a minimum delay of around 8 weeks for the issuing of repayments, and in some cases in excess of 6 months. This is cash that is so often vital for the future prospects of these companies. These companies are investing heavily to push forward innovation and create the technology of tomorrow, and they have huge uncertainties when they're doing so. The Chancellor spent much of yesterday talking about unlocking growth. However, the delays and inefficiencies within HMRC are a key factor that's having a huge negative impact on growth, and until these are resolved, the R&D companies will not be able to unlock their future potential. Thank you, and now back to Jason.